Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, February 2, 2015. You're looking at a daily chart of the SPY, and here's our blue trend line again. And you can see that this morning our blue trend line was pierced pretty good all the way down to the second one, right, from this double bottom here, and almost touched the 200 period moving average, and then we reversed higher. And if you want to get a snapshot of intraday, what that looked like is we go down right out of the chute, okay? This is about 10:30 in the morning, I believe. Oh, sorry about that. Yep, this is about 10 o'clock in the morning. We rip higher. About 11:30, we sell off again, the fake out, and then for the remainder of the day, from about 2 o'clock, 2:30 on, we just ripped higher, and that was it for the day. So let's go back to the daily chart and see what our options are. Let's talk about where we are in the bigger picture. And the bigger picture was, remember here, we had what I would call a weekly cycle bottom, okay? Now, if the weekly cycle bottom holds, which so far it is on a closing basis, all right, then that should play out to the upside. All right, and we should see more follow through the upside. And remember, I said last week that the daily cycle bottom was to culminate late last week. Remember, I said late in the week, and it was Wednesday, it was Thursday, and I said Thursday, that qualifies as late in the week. Then we even went down a little farther on Friday. And then today we dipped a little bit more, and then we reversed higher, and that is really the force of the weekly cycle bottom playing out, because if you remember, if I said that last week the daily bottom was to culminate late in the week, that would mean a turn on Monday. Today is Monday, and the market certainly did turn today. Now we have to see some follow through for it to stick. There's nothing that say we can't go back down here or lower, but if we see some follow through, the odds diminish that we'll come back here and test this trend line. So right now, this becomes a very important day tomorrow. We've got to see follow through to the upside tomorrow, and then we can begin to say that another cycle, daily cycle bottom worked out in our favor. So far, so good. The market did turn today as prescribed, but we have to see some follow through. And if we don't, if the market does decide to reverse back down and break these lows, if we ever did close, excuse me, below this this trend line here on a daily basis, okay, the odds are that we would go down in this 191, 192 area, okay, this gap window here, which is 191.48. So you would say that if we close down in this area, we're probably going to go down here within a couple to 3 or 4 days minimum or maximum. I think that would be a pretty straight shot down here, because I don't think this 200 period is going to hold at all. We've been consolidating above it too many days now for this thing to hold. So it's really this trend line that's dictating what the market's going to do. So the market drew in this trend line, and it's dictating whether or not we're going to stay above or go below this trend line. And as long as we continue to close above this trend line, it's good. But the more we beat on this trend line, the more likely we are to break through. So that's pretty much where we stand in the S&P right now. Let's go over to the gold market. There's not much going on in the gold market. But what I do know, I will tell you, and what I do know is it was a relatively flat day today. And what I do know is I can't exactly tell you which way it's going to go from here. Okay, I would think there's a little bit of a bid underneath the market, meaning a little bit of a bullish sentiment underneath the market. But remember, about a week or so ago, I told you that February was due for a monthly top in gold. What that should mean is we should see about 2 or 3 months of downward pressure in the price of gold. But what that also means is we have a tendency to spike higher into the top. And I don't know exactly when that top is going to show up, but it should show up in the month of February. And it's really now plus 1 month, I guess we could say that. But I would assume that it's going to show up here. So you're going to look for a spike higher in gold. And if we got to 1350 to 1375 in the price of gold, I think that would about be the all we would see on the upside And then if we did get there, depending if, how we got there, it may actually be a reversal trade, meaning a short trade. But we'll see what happens if and when we get there. And if we get there, we'll kind of know it on the way that we're going to go higher. And we know the target, 1350 to 1375, is the target. All right, that's about all I have on gold. Let's go over to crude oil. I'm going to go over to the USO. And we'll just talk about oil, and we'll look at the USO because we definitely did have at least a short-term bottom put in the other day in the price of oil. When oil was down at 50, I said 53.70. We got to 53.58. I'm sorry, 43. I said 43.70. It was 43.58. And right now we're trading at a little over $50. And, off the bottom, that's like a 15% move. If you took the trade of aggressive traders, I know some of you did, took the trade here, okay, and then just put a stop below the low, okay, you're up nicely. Most of them are up about 10% right now, whether you're playing the USO, crude futures, or some other vehicle you chose, you're up about 10% in the trade. Now, the interesting thing about that, if I look at my daily cycles, I have a daily cycle top, okay, and this is a short-term top in the price of crude oil tomorrow. Now, we could spike higher into that daily cycle. So if we went higher tomorrow in the price of crude oil, like another $1 or even $2 in the price of crude, if we went up to $51, $52, I would have to begin to think that we would see a pullback over the following 2 or 3 days in the price of crude. So if we saw 3 solid up days off this low, I would think we may see 2 or 3 good down days following that. So we'll see. I do have a daily cycle top tomorrow in the price of crude oil. And, if we look at where can the price of crude go, if we look at USO, I would say USO could get up into this 1930 area, 1925, 1950 area. 1936 is this high here. So we could get into that area and then may reverse off of that tomorrow, and we could fill this gap here. Maybe we could even spike to $20 on the outside. If I saw $20 or $19.75 to $20, I would think that in the price of crude tomorrow, that would be a stone cold short. So there's my crude oil take. All right, the last thing we'll look at tonight, I think, is interest rates, because I want to show the 10-year interest rate, and I want to show you that, remember when I was saying that the lower interest rates go, the more trouble the market may be in, meaning the stock market. And that proved to be true, and we'll see if this low holds. Now, we held this double bottom from the other day, this morning or today, and we'll see if we get higher rates. A couple of things should happen. From here, we should see a little bit of a lift in the stock market, because if money is going to come out of the bond market, it usually will rotate into the stock market. So higher rates would mean lower bond prices. Lower bond prices means money is coming out of the bond market, and it will usually rotate into riskier assets, meaning the stock market, okay? So if we see higher rates, that's the first thing that's going to happen. The second thing that'll happen is some of your bank stocks, if the market's going up and rates are moving up at the same time, your bank stocks will catch a bid. So your Wells Fargos, your JP Morgans, maybe even Goldman and Bank of America. Those are the 4 bank stocks that would normally catch a bid, the big liquid ones anyway, that would catch a bid if higher rates and the stock market started to go at the same time. So it's just something to watch, something I wanted to make mention of. If you're a day trader out there and you start to see the banks move, you can probably hop on the train if rates are on the move higher, because they'll probably catch a bid prior to rates moving. Anyway, I think that's about all for tonight. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.